Market meltdown and market breadth. This is Charlie giving you the weekend's video. And so, looking at the S&P here, I'm recording this at lunchtime on Friday. So, because I'm heading away for the weekend, so I don't know how today's candle, as it currently is on the S&P here. This is the S&P futures. How this is going to end. But let's have a discussion about this anyway, because firstly, yes, we've had these huge moves across the markets globally, and it's not just been the stock markets; everything's been falling. Even gold's been coming off as well. So even though you'd think that gold might be a safe haven, if we click on gold there, it's not been accelerating this week higher. In fact, it's come down a little bit. So but that may be due to people liquidating profitable positions to pay for their unprofitable positions a bit, and offset those. So um, let's have a look at the weekly and monthly chart here. So look at the weekly first of all, and it really puts it into perspective. But there's a couple of things that when I say put it in perspective, all we've done is so far is pull back down to the area of last August or September. So I know that the headlines make it sound really bad, and obviously the sell-off is pretty severe. But in the context of what the market's done over the years, then the market overall is still doing very well, as regards to the bull market as a whole. Having said that, we've talked about key reversal candles lately, and as we can see, this is the last month of the year, and I talked about the last day of the month, should I say, and that we're going to end up with a key reversal here on the S&P on the monthly. So that could mean that there's some more downside, but it doesn't mean to say, I think I said this in the week, that there couldn't be some up bars within this giant down bar first. So we'll have to see about that. But the point is, there's a couple of points I want to raise. One, from a trading perspective, do be careful. Don't chase the markets. It's very easy to feel FOMO, fear of missing out. I've even felt that this week. I had shorted the S&P last week and came out and took, and what was a lovely profit, but only to then see the S&P carry on going so much further. And so everybody can feel FOMO. You feel like, oh, and I'm missing out. And then what can happen is that you then want to dive into opportunities because of that feeling of the fact that you've missed out and that you should be doing something, because there's all this volatility and you feel like everybody else around the world's making money but I'm not. That's not true, by the way. In most market moves, the majority of people are on the wrong side. So what's going to have been happening with this S&P throughout this whole move here is people would have just been buying and buying and buying and buying, and that's what generally happens all around the world. So the majority are on the wrong side of the move. Now, talking about being on the wrong side of the move, I've been watching the breadth indicator, the McClellan oscillator. Now, the McClellan oscillator, it's been around for years. It's a oversold type reading, and it looks at the advancing stocks versus the declining stocks and the volumes that go into them and stuff. And generally speaking, if the McClellan oscillator closes below minus 200, that means we're in line for a short-term bounce. Okay, doesn't mean to say that the market's going to have to go up forever. It's a short-term bounce, and there's no. It could be a complete turn, but it tells us that the market is short-term now, properly oversold. So as of last night's close in the US stock markets, the McClellan oscillator closed at minus 244. Let me just take this out to maybe a weekly chart here, just so you can see the last times that we've come down minus 200 was in December of 2018. So if I now go back to the S&P, December 2018, you can see what happened next. So all right, I know that's only cherry-picked. I say cherry-picked, this is the last one I've just seen. But I've been using the McClellan oscillator for years, literally since the early 2000s. I've been using the McClellan oscillator. And when you do get, let's take this back to McClellan and the daily chart. When you do get that reading of below minus 200, then do just be aware. It doesn't mean to say that it has to do it that very next day. Sometimes it does. So let's take us back to the proper charts again. So sometimes it could be that maybe we get that bounce day today. I can see that in the futures we've plunged overnight, but we're actually starting to claw our way back up a bit. Wouldn't take much, and the futures are on a profitable day, but on an up day. So it's what's either going to happen is we do have an up day today, and then maybe we get a bit of follow through coming in next week, or we still have a down day today, and then we could then be having an update next week. So certainly, I will use that information. I don't blindly buy, but I just use it as a piece of information, so that if I have more of an intraday setup, which is coming on the long side, that I know that, oh, okay, in the background we are, we're massively oversold from a breadth perspective, and that actually we're now in that zone where we're due a bounce. So I'm not saying go out there and buy, but I'm just giving you that warning that we are properly oversold. So it could be we sell off again today, because I can't see how many people are going to want to hold into the weekend. We've got China's PMI figures are coming out over the weekend, so I don't know. But anything happens in the markets, you never know. So it wouldn't surprise me if we do continue to sell off today, but then I'd then start looking for some green shoots, green shoots next week. But certainly some opportunities coming on the long side maybe next week. But overall, yes, very bearish. The way that we're closing here at the end of the month is quite bearish, and but of course at any point there could be all sorts of fierce rallies could take place. So do watch out for those. So watch out for the breadth. Well, I've told you about the breadth. Just watch out. There could be some short-term bounces coming in the next couple of days or so. Now we've got that reading there, and also don't chase the markets. There'll be plenty of opportunities. Just do your analysis. Wait for your setups to come along. Don't just chase because you feel like you've got to be in something, and otherwise you just become a statistic and you become like one of the crowd out there all around the world who do that kind of stuff. Anyway, there's my advice for this weekend. Take care for now. I'll see you next week.